Hello there, this is the Financial Accounting Tutor back with another problem. This problem revolves around notes receivable. So let's get started. So Jasper makes a $25,000 90-day 7% cash loan to Claiborne Company. Jasper's entry to record the transaction should be A. Debit notes receivable, credit cash, B. Debit accounts receivable, credit notes receivable, C. Debit cash, credit notes receivable. D. Debit notes payable, credit accounts payable. E. Debit notes receivable, credit sales. So, the thing you got to know what a notes receivable is, it kind of works a little bit like accounts receivable. Kind of. They're not exactly the same thing, but in this case, since we're only recording transactions, it's kind of going to work the same way. So, let's look at number A. A. Debit notes receivable for $25,000, credit cash for $25,000. So if Jasper is giving cash away to Claiborne Company, we know it's going to be a credit to cash. We do know that. So what problems do we see that have the word credit to cash in here? Only A. A is going to be the right answer. Debit notes receivable for $25,000, credit cash for $25,000. But let's walk through the other ones though, so you understand what's going on. B, debit accounts receivable, credit notes receivable. Well, if we're issuing a notes receivable to somebody, we know our notes receivable is going to go up. And remember, to increase notes receivable, you debit notes receivable. So we know it's not going to be a credit to notes receivable. So we know that's going to be wrong. C, debit cash, credit notes receivable. Once again, credit notes receivable, $25,000. They're not paying us back. That's the only way that'll be a credit to notes receivable is when we get paid back. We haven't got paid back yet. We just issued a note to Clayton Company. Let's see. D, notes payable, $25,000. Credit accounts payable, $25,000. No, this problem has nothing to do with notes payable at all, or any type of payable. This is about us. We're going to be getting paid back. They're not the ones loaning money to us. We're the ones loaning money to them. Now, if it said let's do it from Clayton, Claiborne Company's perspective, yeah, it's going to be a notes payable to them. Accounts payable still wouldn't be affected, but yes. And then E, debit notes receivable, credit sales. This probably has nothing to do with sales. We're not selling Claiborne Company anything. We're just coming to them saying, you know what, they need some money. We're offering them the money and they're going to pay us back in 90 days. And there you have it. Like I said, when you're issuing a notes receivable, you kind of got to think about what's going on. Like I said, it kind of works like accounts receivable a little bit. But anyways, I will see you in the next video.